I think they'll obliterate Swift. I used this. I think they'll, yeah, could be a blockbuster video easy style event when Netflix came out. It could. I'm not saying it will, but it could. And you're right. It's all down to liquidity. It's not quite there yet. Another popular question is, well, why isn't it already high? We're still waiting for legal clarity, which comes later this year, November, probably with the Clarity Act, where XRP will be classified as a commodity, is my prediction. And then institutions know how they can legally engage with it. And there has been no legal clarity to engage with this thing yet. Plenty of testing. We've seen moments, but most of it's still siloed off on this. Yeah, we won't go into that private public, probably a bit too much for this chat, but yes. So the way, firstly, why all these different protocols, I'll answer that. Every one of them serves their own little unique purpose. So XTC is more trade finance and logistics, shipping, freights, all that sort of stuff. They've cherry-picked that little segment of the market to address, and they've got their relationships very much centered around that, which is different to dealing with the big banks for cross-border payments, tokenization, all that sort of stuff. So XTC will do that. XLM is very much focused on the consumer-centric side of things. So, our everyday payments, everyday sending money overseas to peer-to-peer, not bank-to-bank institutional. So they're kind of below. XRP and Ripple are going for the big money. XLM's going for the consumer side. It's still big money, but much smaller than the institutional. Solana is just a useless meme coin building protocol. And Bitcoin is... I won't crap on Bitcoin, because Bitcoin... One thing people need to understand with Bitcoin is its relevance, whilst heavily manipulated by Tether and propped up in Ponzi scheme fashion, its underlying value really is the fact that Satoshi, whoever it is, created a system that demands a lot of energy to produce and mine new coins. So in the world today, the price of everything is dictated by energy. Every single layer, they put that in their margins, and that's what dictates price. So the relevancy of Bitcoin, not just as a store of value, which is all it ever will be, and it's the reason it's still around, and the reason probably why I don't think it completely dies, is because as long as we run on like a fossil fuel system, it demands a lot of physical energy output to actually run and discover, and that's a big chunk of its value. And right now that doesn't look like it's changing. So I think it'll become like a collector's coin. So it'll become like I think it'll become like it was the first. Supposedly, I've literally got proof that it wasn't the first one, but the supposed first ever crypto. And as long as Satoshi remains anonymous, it will have collector's value, and it'll be a store of value. But I don't think it really doesn't have any practical use. It's slow, takes average. I mean, at best case, you're looking at 10 to 15 minutes to pull off transactions. Okay, they'll go, oh, well, we've got Bitcoin Lightning now, and that helps. Yeah, but it doesn't solve the problem at scale, and that's the problem. That's the big key here. Right now it's everything's speculative value. All the prices in the market are speculative, and I just don't think people realize what's about to happen when they're actually being used for their intended purpose. And we talked a bit about that with XRP before. Bitcoin doesn't have an intended purpose. What's it going to do? It just sits there. It's a straw. So it will get flipped. My thesis is it won't just go to zero. I don't think that. But it won't be number one. And the second part of that question was the stable coins, and that's the most poignant kind of topical thing happening at the moment, with Genius Act passing and every Bob, Jane, Dick and Harry coming out with their own stable coin. The first thing to remember about this Genius Act is if you read the fine print, you will need certification from the Office of the Comptroller of the Currency, which is like essentially in the US, this mob that give you the final sign-off on anything fiscally technological that could be employed in the banking system. So what you'll see, and you can see it in the language, it's not going to be a free-for-all with all these. Not everyone can launch their own stablecoins. You're going to need approval. The institutions, so the banks, are going to really moderate the interest earning on these coins. And it will be quite centralized. So to the speculation of, well, is a stablecoin just a CBDC in disguise? It is. Yes, it is. It's centrally issued or dictated who can issue it. It's not just a free-for-all. And there's rigid protocol that you have to abide by. For instance, it must be backed 1-to-1 with debt. So the short-term US treasuries, which is a great... We'll get into that in a bit, but that's how we're going to partly solve this debt problem and pump the prices massively into the crypto cloud. To the point around stablecoins just solving XRP's problem, this is the one where it gets a bit technical and it's important to address. Stablecoins, in essence, do facilitate instant cross-border transactions between intermediaries, and that's fantastic. It helps out at sort of that middle level, hundreds of millions to a couple $1 billion in transactions across like batch. They basically batch out big transactions, and they can do it that way. So it's not one big dump of like 50 billion or whatever, and that's appealing to banks because one of the counter arguments to like. And I don't believe this, but actually I'm not going to complicate it with that. That goes down a whole other rabbit hole. I'll keep it simple. So people go, oh, well, they're just going to use that then. Why would they use XRP? Let's stick with this explanation. So the key you have to realize is that even when JP Morgan are using their JPM coin, and then Commonwealth Bank here in Australia using CM coin, to settle that stablecoin transaction, both banks need to make sure they have the amount of actual destination fiat currency, Australian dollar and US dollar. They need to hold the amount to actually make that digital version of the dollar work. It might be gold in the future or a combination of things, but they still have to have their unit of account attached to that digital dollar to process it. So the next logical question is, okay, well, hang on, what if the price gets too big in that transaction and they don't have enough of the destination fiat or value? And that is what is going to happen. So I don't think there will be a need to hold the destination fiat anymore or the destination asset class, because guess where all that sits? It sits in the XRPL DEX. So XRP sits here, JPM is here, Commonwealth Bank. They don't need to hold the destination fiat and asset classes anymore. They go, oh, well, the XRPL has $30 trillion running through it right now, and it's sitting at $500 a coin. Well, sick. I don't need to hold and it's what's called Nostra Vostra accounts. So they have to hold their notional value in these accounts, and if they don't have it, that's why transfers can take weeks, because they have to then get intermediaries to funnel the value into their Nostro Vostro to settle the transaction. So when you're sitting here now and it's the new age, you go, well, we don't need these intermediaries to fix up our balance sheet to make this go through anymore because we don't have enough. We're just going to go straight through the XRPL, and we know it's going to go through 100% because it's got $50 trillion to choose from to facilitate that transaction. The end game, of course, being that XRP is the trusted settlement layer by all. It's owned by, that's why it's X. It's owned by no one. It's borderless, and it's fully audible, transparent, etc., and it is decentralized. That is the end game, and that is where we're going. So even if you do the stablecoin, let's say you want to move 200 billion through that stablecoin network, it doesn't work unless you funnel it through and actually extract the value from somewhere. It can't just be, printed currency. It has to be backed, and the banks still need that unit of account. And if they don't have it on Nostro Vostro, they need to pull it from somewhere else. That's where they pull it from.